at the TV last night. I can't quite remember why. But hopefully everyone's in a good mood. I certainly am. Let's crack on, hopefully. Yeah, my clicker is working. My name's, for those of you who haven't seen us before, my name is Tony Sutton. I'm the Managing Director of Specialist Financial Services Limited, and I am your host for today. A little bit about me. I've been doing this specialist market since 1983 for my sins. 6 years of a specialist lender and 18 months with basically a second charge broker. And then I set up my first brokerage over 35 years ago in May 1989. Grew that from a two-man operation operating from an absolute hovel in Wembley. It was awful. And grew that to up to 141 employees at its peak. We were one of the largest brokers in the country at the time doing what we did. Left in 2004, had a major disagreement with my business partner and set up Specialist Financial Services Limited and traded very, very successfully until the crash took away all my lenders. But stayed with it. I don't really know anything else. So I thought, well, what else could I do? So stayed with it. And here we are today, 40 years later, with what I know just turned 61. How long I'm going to be doing this, I'm not quite sure. Maybe another 5, 7, 10 years, who knows? But still enjoy it, which is the main thing. Even with all the nonsense we have to go through these days with the FCA and the like, but do still enjoy it. Okay, I've just clicked too much. My little bit. We always cover a claim to fame for the speakers and myself. Mine's quite difficult because I'm doing 12 of these a year sometimes, so there's only so many claim to fames you've got. So I do occasionally mix in a claim to shame, but this is one claim to fame. 17. One of my really good school friends lived at the top. We lived in Stanmore. Lived at the top of Stanmore Hill up in northwest London, and his next door neighbour was a guy called Paddy Sharpin. You can see from the picture there, you probably recognise him, who ran a mobile disco called Hit Connection. I've been collecting LPs and singles since I was 9 years old, and I've now got over 10,000 of them, to my wife's disgust. And because of that, I've gathered over the years a pretty good knowledge of music. I often I got very friendly with Paddy, and he used to use me as his right-hand man at parties, mainly when there was 60s parties, because that was like all the rage in the early 80s, having 60s parties in Stanmore. So I used to turn up with a box of like LPs and 7-inch singles, and we'd go into some really swanky doos, to be honest with you. Several years later, he was obviously discovered. You can tell from the mullet. He became famous as Pat Sharp, but still known to his friends as Paddy. So there you go. Our sponsor this month is Tab, who will be covering bridging a little bit later, and also probably a little bit of their commercial stuff as well. So a massive thank you to them. Please remember, we are depending on outsourced technology. We're also depending on making sure I've actually plugged my computer into the socket. I have, good, because I'm not going to run out of battery. Obviously, the equipment we use, if there's any problem, I've made sure there's no Windows updates due, but who knows, they might have slipped in a sneaky one overnight, and I've not seen yet, and try and close me down. That has happened once. It started doing a Windows update halfway through a presentation. Our broadband is not being affected by the rain, which is not going to happen today because it's nice and sunny here, and it's also baking hot in this, so by the end of this, I will have probably melted. The speakers broadband, obviously, and where they're presenting from, hopefully we'll have no issues with that. And Microsoft not getting the hump too much because we refuse to use Teams for our presentations. So please bear with us. Hopefully, touch wood, no problems, but you can never tell, unfortunately. If you have a question, type your message box in the bottom right corner, and we will try to get to all the questions in the time we have today. This is a mini specialist mortgage web show, so it's 3 speakers, no breaks, me not talking as much, which is good because I don't think my voice is going to last. As you can tell, it's getting a bit croaky already. But yeah, we will. They say it's an hour less than normal. These are our 3 speakers. We've got Duncan Kreeger from Tab, Grace Bennett from the Family Burden Society, and Davey Gurm from InterBay. There's the logos, just in case you don't recognise the names. Just basically, so, and that's the times they're on, from 10:15 Duncan all the way up to 11:45 Davey. If they're running ahead of time, great. It means I can talk a little bit slower. If they sort of go over time, then I'll be talking as if I'm on helium a little bit later. Today's objectives, obviously, increase your knowledge of what's going on in the market, in the specialist market, and also other bits and pieces as well. But mainly today we're covering specialist buy-to-let, commercial mortgages, residential first charge, and bridging. and also help you a little bit of guidance. And I've always found that there's so many leeches that attach themselves to the financial services industry, the mortgage industry, especially when anything comes out. GDPR, I remember firms charging £1,500 for a seminar on GDPR, which when you left it, you was actually no more knowledgeable than you were when you started. A little bit on consumer duty, vulnerable customers, and the FCA. Always like to make a comment on the FCA. It allows me to vent a little bit. Honestly, just at the moment, it is ridiculous. But this is all free. We don't charge for any of this. There is so much out there where you have to pay stupid fees. And this is even from some of the compliance providers. And I think that's disgraceful, I really do. But it is what it is. Presentations each last approximately 20 minutes, 10-minute Q&A after each session. Speakers have set themselves questions if you don't ask any, so don't give them an easy ride. And remember, there's no such thing as a stupid question. The only time we struggle is if you haven't read the question that you just typed properly and it doesn't make sense. So just check before you click the send button that it does actually read the way you want it to. And that way we should hopefully be able to answer it with the speaker as well. Feedback questionnaire will be automatically available at the end of today's show. It will ask questions about today and what we need to improve, and it will also ask you to rate each speaker for their presentation. We haven't got a sponsor, like a prize draw sponsor this month. So I might actually do something a little bit different. I'm making this up as I go along a little bit, but I might do something a little bit different towards the end. So stay with us, and I'll probably explain that a little bit later, if I remember, of course. But very, very important. Please give us your feedback, because I can't tell you how important it is. It's how we structure these for the future, because we've now done, this is our 51st show, I believe. It is. It was 50 last month. So 51st show, and these are obviously very, very popular. As you can probably tell, many of you have returned month after month to see what the speakers have got to say. Probably not to see what I've got to say, but certainly what the speakers have got to say. But your feedback is absolutely vital. You will be emailed your CPD certificate by 5:30 tomorrow. Please check your spam folder if not received. The reason it doesn't go out automatically afterwards is these are not just a little piece of paper you have to handwrite your name and firm in. These actually look like a proper certificate that are good enough to probably put up on your wall if you wanted to. So they do take a little bit of time. So please check your spam if not received, only because of all the calls we get saying I've not received my CPD, 99% of them are sitting in your spam folder. And also just make sure that you've not basically opted out of emails. If you do, you're not going to get your CPD. So don't do anything dark. We have had people who've actually, after a show, have then opted out of our emails and then said, well, I haven't got my CPD. Well, because you won't allow us to send you emails. So that will be with you. If you haven't got it, give us a call Monday is probably best, and we will get that out to you. If you want to know what you can earn by coming through us, our commission and prop fee guide is available at the end of today's show. Very easy to download, or you can actually get that from our website. Entirely up to you, but that shows you exactly what we're able to pay away. GDPR, I mentioned we covered GDPR. I've been now offering this since 2018. Quite simply because we found that the vast majority of people have done nothing at all on GDPR because they didn't know what to do. Let's face it, who did? Not even the people who actually designed the rules probably knew what was going on. Certainly the people who were doing the training out there on GDPR didn't have a clue. So I stumbled across something on the ICO, the Information Commissioner's website, which was a checklist, which I thought, well, that's a bloody good idea. I'll do that. But it wasn't really fit for purpose because you couldn't do, once you'd done it, you couldn't actually do anything. You couldn't print it off, for example. So I just copied and pasted it onto a document, went through it, ticked all the boxes, signed it on the front, dated it, filed it away, scanned it and filed it away. And I thought, why don't they give this out to people who attend our shows? So we do. So they've got the original one that should have been done in 2018, and you've then got the one that should be done every year thereafter, the annual assessment. And again, it's tick boxing, I know, but if you get hacked and the FCA and the ICO come into your office, and they will want to because they want to fine you, because they want, especially if you've not done anything, at least you've got something on file that you can show them. Yes, we have been adhering to GDPR or trying to adhere to it. If you do nothing at all, they will fine you. If you've been hacked and there's been any customer losses, then the claims management companies will probably take what you've got left. This is something that we drew up last year. Again, I'm no expert in consumer duty and vulnerable customers, but what I am good at doing is copying and pasting from others' ideas. So when 4 lenders came out with vulnerable customer guides, I amalgamated the four, put it into a document that not only identifies when a vulnerable customer is showing, but also what to do, which is the important part. We're never told what to do. We're not even told sometimes what a vulnerable customer is. We're just told vulnerability. Well, pretty much everyone's vulnerable at some stage in their life. So this will tell you what to do as well. If you want this, just type VC into the box into the type your message box, and I will get this over to you. No one's actually mentioned anything yet, which is a slight worry, because normally I get a good morning or something just that tells me that I'm not talking to myself. Hopefully I'm not. Yeah, there is. There's some mornings. Excellent. Fine. Fantastic. So if you do want this, you think this will be useful to you, it's certainly very useful to us, because I just keep this up on the wall. And when the staff do come across something, they just have a quick read through it just to see, okay, this is the guidance that we need to adhere to. And it's worked really, really well for us in the past 12 months. Consumer duty, I'm not talking about it later because I don't need to. But if you want to learn more, then have a look on our website. You can watch the show that we had on the 23rd of May with Robert Sinclair, very good friend of mine for many years now, which is very useful because he doesn't normally do shows for brokers. He does them for networks and the like. But he's now done 3 with us. And this was basically the second stage of implementation, which those of you that are directly authorized will have to have done by the end of this month. It's not as scary as it sounds. It's just made to sound scary by the FCA and compliance providers, so they can screw a few more quid out of us. But it really isn't that difficult at all. As long as you've actually done some of the stuff that they wanted you to do over the last 12 months, then you should be absolutely fine. So that's available to watch on our website. And also the 2 from last year that Robert did with us in May and also October. Have a watch of those if you haven't. These are some of our most popular shows ever. So just have a look. It won't take you. Get CPD as well, obviously. I think the next slide probably tells you that. It doesn't know. The next one after that tells you. And there's also the other Sutton, the specialist that we did last year, which was Grace, who's here today from Family Building Society, Colin from Tuscan, and Roger, who was at Tandem and is now somewhere else. He did tell me last week, and unfortunately, I can't remember what it's called. No, can't remember. But it's good to see him back anyway. And also we had earlier on this year, we had Scott from Roma Finance, Volatility Creates Opportunity, the highest ranked show we've ever done. So that was incredibly popular. Again, have a look. That was excellent. It just gave a little insight into the economy and how lenders view what they have to do over the course of trying to plan for the coming months. But yeah, have a watch if you possibly can. And remember, you do get, as I just mentioned, you do get CPD for every show you watch. So again, if you've got spare time, just go on the website, have a look. And if you're this is one last thing. If you are one of the 11% of FCA authorized brokers who are thinking, sod this, I've had enough. I've had enough with consumer duty. I've had enough with vulnerability. I've had enough. I've been doing this 40 years. I've not had a complaint in donkey's years. But I'm being treated the same as the cowboys out there who do get away with it, or the banks who do get away with it. And are normally only sort of like taken to task when they're already lying on the beach somewhere, having sold their company for multi-millions. So if you are getting a little bit fed up with it and you just want to get away from regulation, give us a call and we can help you out with your business and your client bank. Okay, first presentation's about to start. I'm actually a minute early, which is good. So this makes a change for me not to talk too much. It's about to start. Get yourself comfortable. There will be a slight pause, about 10 seconds, just whilst we switch the slides over, and for the benefit, obviously, our YouTube videos, so you don't want me talking over it. And here we go. Right, our next speaker. I'm absolutely delighted to welcome Duncan. Duncan, how are you?
Very, very well, thank you. How are you?
Yeah, really good, really good. Duncan and I first met in a pub, 2008. He just launched. Am I allowed to mention your previous company?
If you want to, yeah.
West One Loans. Duncan was the founder of West One Loans all those years ago, and I was in a pub. I think it was just after the Earl's Court exhibition. I can't remember what it used to be called now, but we was in a pub. Everyone was absolutely. I mean, it was a real Debbie Downer that day because the market was going basically completely downhill. And Duncan, his dad, came in the pub and said, "Oh, we're just launching a bridging lender," and it's like we wanted to throw our pints at them. It was a bad time for the industry, but by God, did he start up a company? He really did. So started up. Well, I'll come to this in a moment because we've obviously got your introduction. But absolutely delighted. So Duncan is the founder and major shareholder of Tab, and I should probably click on that so we've got a nice picture of him. There you go.
Yeah.
A company you probably would have heard of. They're making lots of noises in the marketplace and have recently joined our Premier panel of bridging lenders. And they've got a fantastic team of people behind them, which is always a major benefit when you're dealing with any lender. Their staff do know what they're doing, which is a major, well, it's actually quite unusual sometimes in the bridging market, we find.
Stolen my whole pitch, Tony.
Yeah, I know. That's you done. You should have received this on email this morning. This is Tab's product guide. So that will be in your inbox. Check your spam if it's not there. A little bit about that. I have no idea what's just happened there because your entire thing has gone into...
Giving you the Russian version by the looks of it, which is...
Yeah, I really don't... Well, luckily, just because this sort of thing can happen sometimes, and I'm hoping the rest of the presentation isn't the same. That has never happened in all the years I've been doing these since 2017, that I have no idea why that's happened, but that's a slight worry. We need to check some of the other presentations because that might have happened on others as well. Okay, so I'm going to read this from my... Honestly, right. It was absolutely fine last night when I checked all these on my laptop, and I'm using the same laptop.
Maybe we'll just leave it on that page.
Yeah, maybe. Well, I'll just read it. So Duncan Kreeger is the founder and CEO of Tab. With a career spanning over 2 decades, Duncan has built and sold 120 million valuation business, and he has successfully managed over 500 million of private capital. His expertise extends to completing secured loans worth an impressive 2.5 billion. In 2018, Duncan founded Tab, a pioneering property finance and investment firm that revolutionizes the industry with a commitment to trust, transparency, and simplicity. Duncan is reshaping the way people invest in property. Beyond his professional achievements, Duncan is a devoted father of 4, an avid Arsenal supporter, and a car enthusiast. And his claim to fame is that Duncan has met Lewis Hamilton and his dog. Lewis was on a skateboard in Monaco. I presume the dog wasn't. And pretended not to hear Duncan as he walked past them. I did the same.
Actually, the dog was on the skateboard.
Oh, the dog was on the skateboard. Okay, he did the same to me, by the way, does it?
But they both went past me and pretended they couldn't hear me.
I thought your claim to fame was going to be that you and I were the first people who contacted each other or connected on Threads or Thread or whatever it's called. It's when it first came out. I went on there and I thought, I wonder if there's anyone on there, and Duncan was the only one I knew. So yeah, he and I connected. Duncan, it's over to you. I'm going to try and sort out what the problem is with the Russian. I'm going to check actually the previous one as well has gone into whatever language that might be. So no idea.
Luckily, that's your slides and not my slides.
Well, luckily, yeah. The wonders of technology, eh? Don't you just love it? Right, I'm going to go and lie down somewhere in a darkened room. I'll see you in about 20 minutes, Duncan. Good luck.
Right, over to me then. Thank you very much. Thank you, Tony. I really, really appreciate the kind introduction and interesting to hear you speaking about all the things that you can help with. So thank you very much. Obviously, I'm feeling very happy this morning off the back of England's semi-final win. So just thought I'd put that on the record. Off to the final next. And yeah, very nice to hear I'm the 51st guest. So must be 50 very interesting presentations prior to me. But thank you very much for all taking the time to listen. I will try to stick to 20 minutes, although I have been known to rattle on a bit in the past. And this presentation is really focused around our bridging product. But I think it is important to explain more about the business and who we are. Obviously, Tony gave me a sort of introduction about my background and how I got here. But what we'll cover in this presentation is a bit about Tab, including some of our key milestones, our missions and values, which are extremely important to us, both internally and externally. Obviously, some information about our lending products and how it all works. There's also some information here about the broker portal, which is starting to pick up some momentum. And really the theme here is about adding value back to our customers. Some useful information about bridging loans in general, what the market thinks they're typically used for, and some case studies. And as well as talking more about the bridging product specifically, we also will touch on some of our funding sources, because I think in this market that is extremely important. So hopefully someone will nudge me if they've got any questions. Those will come up at the end. But for now, I'll just take you through a little bit about our journey from 2018 to where we are now. So 2018 founded the business. Started to build a loan book, one good loan at a time. And By 2020, we'd already started launching our online platform, which we're extremely proud of. So for us, having access to real-time information is really important for us internally to be able to look at stuff as it arrives. But also whenever you're a customer of the business, you should be able to log in and access, whether you're a broker or an investor or even a borrower. There are elements of the platform designed specifically for you. And by 2021, I should say, we'd already crashed through £50 million under management, which felt like a very big milestone at the time, and up to just over 20 employees at that time. 2022 is when we attracted our first institutional funding line. So although we had some other small lines prior to that, that was an American debt fund that provided us 120 million of capital. And that helped to catapult us into being able to write more loans and to support the market in the areas that we understood the market needed it the most. So unlike our other lenders, we're not just trying to flood the market with tried and tested products. What we're trying to do is listen to customers, hear what they need, where loans slip through the net or through the gaps, and then try to design products that really add value back to the market. So 2023, we're continuing to push forward with innovation by introducing things like open banking to our platform. These things have been tested for a long time. I think there are lots of areas around the market where good example is old credit reports are a little bit out of date, hard to access, hard to read. Open banking really can open up another level of getting through that information really quickly. Also helps us with AML and KYC. So all through the world, trying to make sure we're improving the business at every step. And really excitingly, we also managed to secure a much larger institutional line of capital funded mainly by NatWest Markets, but that gave us 300 million of capital to, again, pass cheaper pricing down to our customers on the core bridging product, but also, as Tony mentioned, entering into the longer term 10-year commercial mortgage market, which has felt like a really big step forward for the business. And for us, we'll talk a lot about the life cycle of a customer's journey, where we've worked really hard to build relationships with brokers and with borrowers. We want to ensure that we listen and we provide products that capture the whole life cycle of that journey. And we're also very dedicated as a business to ESG. And that starts with us in our own business, trying to make sure we get the basics right. And I think I'm extremely proud, but I think we do a very, very good job around that. We're not perfect. Absolutely nobody is. And the market is changing constantly about what people think is important and what they don't. But for us, ESG really is about making sure that good buildings are maintained and brought into the future, because we feel that there's kind of two directions a property can go in. If one is unloved and doesn't have money spent on it and isn't modernized, it will attract worse tenants and therefore the values can be affected. And on the flip side, if you invest in your property and you're improving it and you're looking at these ESG initiatives, then I believe you'll attract better tenants and have better buildings that will last the test of time. 2024 has been interestingly about integrating AI into our platform. We don't shout about this too much, but we are very busy in the background, making sure that we test and implement things that are important. So we can now assess evaluation in a matter of seconds. And there's lots of other interesting things that we're doing around that. And if anybody wants to ask any questions or has any suggestions about how we should use these things to our advantage, then we are all ears. And also just continuing down the fractional ownership model, which is something that I'm extremely passionate about, and where we've had investors for a number of years at TAB investing in fractional loan investment. We're also very proud and very keen to develop the fractional ownership model. It's picking up a lot of momentum in Dubai and in other areas of the world, and we want to be the frontiers in the UK doing that. And I've touched on the TAB mortgage as well. And 25 to 27, We're not going anywhere. We're extremely dedicated to the market, and hopefully you'll see our loan book growing and our funds under management growing more generally. So let me talk a little bit about our mission and our key values. So our values have remained constant pretty much since inception. They're these 5 pillars that we focus on in every element of what we do internally and externally. So our core values are trust, transparency, personal, innovation, and efficiency. And we do lean heavily into TAB, trust, transparency. And to me, that is the key to building a long-term business, and it's extremely important to us. I think we're aware that we don't always get it right. So it's not just simple enough to say TAB, trust, transparency, and you should take our word for it. Where we really pride ourselves, and you'll see at the end, is some kind of feedback that we get, some independent reviews, and those always make me smile when people feel, having transacted with TAB, like they get what we set out to deliver at the outset. But being personal is really important to us as well. So just because we're a tech platform and we want to make life easy for people does not mean that we're not at the end of the phone. We understand the complexities of getting bridging loans completed, and sometimes you need all hands on deck. And although we will use technology to our advantage where we can, we absolutely won't do that to the detriment of being personal and also being efficient. So if you get through to somebody, everybody in the business should understand who you are, why you're calling. We should have thorough notes on the platform, and we should be able to efficiently resolve any questions or queries that you have along the way. And clearly innovation is part of our DNA. It is super important. Nobody was talking about AI 2 years ago, and now it's a really important part of what we're doing. Open banking, as I mentioned earlier, was almost a pipe dream years ago, and now we can hook up to someone's bank account and get really interesting feedback about their spending habits and their affordability. And I think that really will help to revolutionize the market as well. So I won't stay on this too long. I can see I've only got 13 minutes left. What I do want to talk about now is our lending products as a whole. So commercial mortgage is something new for us. We've been doing that successfully since the beginning of this year. The amount of origination is climbing on a monthly basis, and the amount of terms we're issuing are increasing. And I think the really big point to note here is, if you've seen this product, is that we are about to have a pretty significant price reduction. So if you want to keep up to date with our rates, the best way I suggest you do that is by registering to receive our newsletter on our website. It should be pretty straightforward. I will make sure that we circulate that. But the best way to stay up to date with what we're up to is that we produce a monthly newsletter. We have done every month since we started. And that will tell you about changes in rates and also changes for the business as a whole. So we offer 10-year mortgages. They're priced at a margin over base. In fact, all of our products are priced at a margin over the Bank of England base rate. Yes, that means while Bank of England base rate has been climbing, that will affect how much you pay every month. But also, as and when rates start to come down again, then borrowers will get the immediate effect of that. And that's something we feel really passionate about, is passing on these reductions as they come. We do first charge and second charge loans on both residential and commercial property, and that is quite unique. Bridging loans covers quite a broad spectrum of loans, typically disguised as a short-term mortgage. But where we're able to lend a first charge and a second charge on any type of property, pretty much, it does give people the opportunity to leverage on other assets that they may have and use them towards a purchase. But also we do things like refurbishment loans and development finance. So we do really understand the life cycle of a loan, and it is important to us that we understand what a borrower's needs are, and we don't just try to put them in the only box that we have. And we'll talk a bit more about these products as we go. Obviously, by doing both residential and commercial property and being proficient in both, that opens up mixed use property as well, which I've always felt is one of these areas where things slip through the net. So let's talk a little bit about the tab bridging product, because I know that's what you're all keen to hear more about. So on the left-hand side, the bullet points are telling you that we lend between 100,000 and 7.5 million pounds per loan. Typically, that would be represented as a per property type of number as well, in that we're happy, and we have on many occasions split loans up into multiple loans where it looks like somebody needs to borrow 8 million pounds across 4 different properties. There's no reason why we can't split those loans up, different terms, different rates if they're require different leverage, etc. We do lend bridging loans up to 2 years. In fact, we have been known to go up to 3 years. Now that we have the longer term product, it seems less sensible that one would take a more expensive loan for a longer period. But we do lend up to 2 years, and we do lend up to 75% as well. So for, you know, certain types of property, we are keen to push leverage. We do have a lot of faith in the property market. We have started to see things moving in the right direction. And although there are periods where we've had risk off a little bit more, I think for the right type of properties, we feel that 75% is a sensible level. Again, our interest rates are tracking Bank of England base rate. Similar to our mortgage rates, we are about to release some big news around price reductions across all of our products. Currently, we price bridging loans from 5.99 or 6% over the Bank of England base rate. And again, they track Bank of England base rate, meaning as Bank of England base rate starts to fall, that will affect the borrower's payments, even if they have had all of the interest reducted for the full term. There would be a refund due to them on redemption. And we have no exit fees at any time on our bridging products. So we don't penalise people for paying us back early. We want to promote good behaviour, and that's something that we've always done. And our arrangement fees are 2%, and dependent on which clubs you come through and the volume of business that you write with us, we do try to pay away more and more of that to promote a good working relationship. And we do unregulated lending in England, Wales, and more recently in Scotland, which has been an interesting positive addition to our book as well. So I'll spend a little bit of time on the property types because that's quite consistent across all products. Obviously, there are some nuances with different products where we rely on the income of that property to service any debt, but the types of properties that you'll get used to us lending against. No, we don't lend in Northern Ireland at the moment. I'll probably come back to questions later, but I just saw that pop up in the corner of my eye. Something we are looking at all the time though. So we lend against residential investment property. We lend against houses of multiple occupancy and all the types of MUFBs and MUFPs that you'll see around that area. We do holiday lets, and we do like Airbnb as well. We understand that this is quite a mature market, and this is one of the areas I think that you benefit dealing with somebody like us rather than a bank or a building society where these sorts of things are seen to be a bit more risque. We quite like and understand if there's a history on Airbnb, and similar to corporate lets. So these can be classed sort of grouped into the short lets category and therefore be unacceptable to some lenders, but to us, we quite like it. Commercial property and complex commercial, all types of industrial, all types of offices and all different things that might happen there, all parts of the high street. We're big fans of supporting the high street wherever we can, improvements to all the types of offices and short-term let offices and all those things around there, multi-let on licenses and those types of things we think we understand really well. And where property's got alternative use value, that's something that we're really keen to pursue. So just because you use it for an Airbnb doesn't mean it couldn't be let on a normal AST in the future. And we've been comfortable lending on vacant units. I think development exit's a good example of this, where a vacant unit might typically put someone off. But for us, we understand that there's a gap between when you let something, when you buy something or finish it, and when you let it. And we lend to individuals, limited companies, LLPs, expats, foreign nationals, PLCs, offshore companies. And we are always trying to find ways. We're looking at loans for SIPs and SASs at the moment, which is an area that we feel really confident in, but something we don't often shout about, maybe as much as we should. So I can see we've got 5 minutes left, and I am looking for my next slide. I'm not going to spend too much time on this slide right now. This will be available to you. It will just point out some of the nuances when it comes to refurbishment and development. But what I would like to spend a couple of minutes talking about is our diverse funding sources. And this is something I've learned throughout my career that is extremely important to understand when you're dealing with a lender. This market sentiment can change very quickly. And when you're funded just by one American debt fund, you can expect there'll be times in the life cycle of lending and funding that the mood may change and the mood will change. And for us, we want to make sure that we're able to support our borrowers whenever these sort of issues arise. So we have this new shiny facility that I talked about with NatWest, who have backed us to really build a more diverse loan book. That's not our only institutional line. We still carry over the American Debt Fund, and we have very good relations with all of them. They're all keen to increase and to bring other parties into those syndicates. So we feel in a really good position with our institutional funding lines. But we also still have what I've always described as an army of high net worth investors who all have different appetite for risk. They all like different types of property, and it helps us with areas like concentration risk and eligibility criteria where loans just don't quite fit in the and we want to be able to help a borrower, help a customer to deliver something. We have more than 2,500 investors registered on our platform ready to invest, and almost 20% of those are active in nearly 100 million of our portfolio. So we're constantly trying to grow that, constantly trying to build relationships and explain what we do there. So throughout our 230 million of live loans that we manage at the moment, there's a pretty good mix of high net worths and institutional funding lines. And we also have access to things like bonds and corporate loans, which over the years we've used to our benefit. And again, to make sure that we're always adding something. And we can always remain flexible with our rates and adaptable with our loan to values. And our terms are still completely bespoke. And I think that is super important when it comes to bridging finance. Appreciate I'm whizzing through a lot of this. I am happy to have one-to-ones or to pick up on any specifics. And I know we'll have a Q&A shortly. How it works is always pretty simple. You can get in touch with us. Starts with getting in touch. We like emails, texts, WhatsApp, calls, voicemails, voice notes, whatever suits you, suits us. So we're open all the time, trying to make sure that we can issue terms really quickly. But when you need to talk to someone, you talk to someone who understands us. We're very proud of our online application process. That means that you can work collaboratively with your customer in an application form and submit it, sign it and submit it without the need for printing a single document or signing or scanning anything at all. So we do that by having a record of where it was submitted, by who, at what time, using what device, really trying to leverage technology to our advantage here. And submission of a case, underwriting a case is all extremely modern. Happy to go through that process in more detail when the clock's not running against me. And obviously the final bit is completion, where both your customer gets their money and where you get paid. And all of that happens within, if one chooses to use it, a broker portal. And I think more people should. It means that you don't necessarily need to speak to somebody. You can check this stuff in the middle of the night or early in the morning or after you get home from your busy day. And we'll talk more about this broker portal in more detail. I'll use the last 30 seconds, I think, just to show that, as I said earlier, bridging loans is a pretty wide topic. And what we've seen from market data is that these areas, auction purchases, business purposes, chain breaks, investment purchases, rebridging, heavy refurb, regulated finance, unregulated refinances, and other, all of these topics are covered under the one banner of bridging loans. Welcome back, Tony.
Welcome. Thank you.
Hopefully that was of some value to you guys and what you're expecting.
Absolutely. All I say is, obviously, delegates, of course, you can go direct to Tab, but we far prefer it to come through us. You'd earn the same as if you went direct. So obviously, you've got our expertise and our contacts within Tab, who are quite extensive now with the people they've taken on. So there is stuff that we can potentially, I don't want to say get through that you can't, but there's stuff, because we know the way they work, we know them so well, that we can help you to complete more businesses probably.
Yeah, and I'll just add quickly from our side that we completely agree. I think presentation is key when it comes to presenting a case to a lender. And I think obviously your years of experience, and obviously not every loan is perfect for Tab, and that's why using you guys is really important, because brokers tend to get a little bit lazy and a little bit comfortable when one lender's doing a good job, but it's really important to keep tracking the market and seeing what's best for your customer.
Yeah, I'm going to talk about it a little bit later, but we do have our own sourcing system for bridging, which we only brought in because it makes it so much easier for my staff, in that it is in real time. It just shows them what is the best available out there. It just means we're not being undercut by another broker who's gone to a lender that we weren't aware of was charging sort of like 0.01% less than the lender we've chosen, for example.
Yeah.
So, and again, it's just very important. It also means you can actually show your clients some figures within a couple of minutes, rather than doing hours of research yourself. You've actually got a decision in principle you can show to a client and say, this is what it's likely to cost you. Okay, let's get it started. So, okay, we'll go on to the questions. You've not really run over time because you've still got 3 minutes, but Nick has asked, do you lend to SIPs? I think you mentioned that in your presentation.
Yes, we do lend to SIPs. We understand the market extremely well, and interestingly, we allow SIPs to invest into our products as well. So we've got a lot of good relationships with SIP providers. We understand how it works. We're very comfortable. In fact, there's a lot of positives for a sort of risk level on SIPs that I think is undervalued. So from our point of view, the answer is yes.
Okay, is there a minimum loan on that? A lot of lenders have a minimum because of the amount of work that's involved.
No, there isn't. I mean, there's a maximum loan because it's limited to how, 50% of a SIP's assets, which is a sort of odd anomaly, but good from a lending perspective. But no, we have a minimum 100,000 loan normally anyway. We do work to 150,000 minimum property valuation. So we don't lend on low value assets, but we're flexible around these things as well.
Okay. I'm going to read the questions that you or your team have set, but the typeface is so small, we have to do one of these because it is literally...
I knew you'd blame our text.
It's my glasses, obviously. Should put one the right way around. What are the key trends you're seeing in the bridging market at the moment, and how might these trends impact lenders, borrowers, and investment strategies over the next 3 years? Good question.
I mean, look, I'm talking a lot at the moment about, probably because I'm in tune with what Labour's been promoting, but really the need for more housing. There's something that is obviously extremely topical, has been topical for a long time, but with little action taken. We're not building the 300,000 homes a year that we need to build. It sounds like there is more appetite to do that. Firstly, to unlock planning, which I think has been an absolute pain in the arse for as long as I can remember. I think if there is a willingness to let the reins go a little bit on planning, talk about the grey belt, but just more generally getting applications through quicker, avoiding going into disputes with councils about things that obviously fit policy, that feels like a big positive. I guess we're all hoping for rate reductions, and what that's meant whilst rates have been high is that a lot of viable products have become projects have become unviable, and it means that there is a lot of deals stuck. But I think people now going into sites where there's a kind of 2-year turnaround, it's actually quite an exciting time. If you think you're going to buy something this year, get planning next year and deliver it to the market the year after, you really want to be delivering new units into a rising market rather than a declining market. So I think that is something that's been extremely topical in my office recently.
Okay, got a couple of questions. Graham has said, very good presentation, thanks. As a fairly new broker, please explain the fractional offer.
I'd absolutely love to. I would have done the whole presentation on it if I was allowed. In really simple terms, Tony,
I'm just thinking if it's something that you could maybe do that is, it's a lengthy one, why not come back and do a Sutton the Specialist, which is something I only do with directors of companies. And obviously with you being the main man at TAB and the major shareholder, I think that might be a good idea. Because I think
look, I'd be keen to do that. I mean, look, in simple terms, it's allowing people to club together and own a property together without any debt. So if you owned 5% of a property, you would be entitled to 5% of that property's income. The idea being that we can open up investing in real estate to many, many more people who otherwise couldn't afford a deposit or don't have the borrowing power. And the second stage of that is to try and create some liquidity and allow people to trade amongst themselves. Let's do that, Tony. I'll hold you to that, though, if that's okay.
Okay, we'll get that. That'll be one for this year, people. Right. We can cover that. And obviously many other. Duncan's got, he's set up 2 major bridging loan lenders now. So he's got experience that is very, very rare in the market. Yeah. Very rare. One last question. Do you do, and this is from Abin, do you do under market value purchases and what LTV?
Yeah, so the sort of headline response is that we will do 90% of purchase price as long as it doesn't exceed 70% of a value. There are a number of different reasons why an undervalue purchase can take place. The best example is father gifting some of the value to their children. That's really easy to understand. Where you're buying something undervalue at auction, I find it extremely difficult to get my head around because when something's been exposed to the room, I would argue that that is not just its price, but actually its top price. But we're open to an argument. We love to discuss these things and debate them, but we will lend up to 90%. Don't forget, you could borrow over 100% if you're prepared to put other assets up as well. So if somebody has a portfolio with equity in it and they're buying another property, we'll happily charge other properties, release equity there, wrap it all up in one simple transaction so you don't have to actually put any equity in. That's where I think we come into our own. So more than happy to.
Fabulous. Duncan, thank you so much. Going to hold you to that. We'll have you back this year for an hour or so. My team will be in touch with your team.
Right.
Thanks again.
Good luck for the rest of the show. Very good job.
And I must pop along and see your offices, which I keep promising I'm going to do. I mean, you are only about 8 miles away, so why I haven't done it yet, I don't know. But
well, maybe we'll do a face-to-face interview next time for the property. You'll have to bring your whole setup, Tony. Good luck for the rest of the day. Thank you very much for having me.
Right, people, we'll crack on to our next speaker, who just waiting for the slides to load. Hope you enjoyed that. That was very good. We also hopefully sorted out our problem. It turns out that I mentioned that Microsoft don't like companies using anything other than Teams. Guess what they've done? Yeah, they've done something on fonts. So it meant that the fonts came out as something totally, Russian, a mixture of Russian, Japanese, and God knows what else. But we've now rectified that problem. And there's Grace. Hi, Grace. How are you?
I'm good, thanks. How are you?
Yeah, very well, thanks. Very well. Just back from holiday, so I did get your phone call whilst I was away. I'll give you a call later. We are a couple of minutes behind, but I know Grace is going to fly through these. So, okay. Right, so we have Grace Bennett from the Family Building Society, one of the most proactive. I don't like the word BDM, I really don't, but I suppose that's possibly what you are, BDM. But one of the most proactive and one of the very few that I actually say to our broker partners, this is Grace's telephone number. If you've got a case, speak to her. We're a packager partner for Family Building Society, and therefore it obviously makes sense for our broker partners to be able to speak to somebody who can give that decision straight away, rather than come to us and ask a very obscure question which we can't answer, have to go to Grace, then come back, go back. Cuts out the middleman, really. But she's more than happy to do that. So her details will appear at the end. You should have received this on your email this morning. So have a quick look at that. We also do have a booklet, which I'm trying to update is always quite difficult when you just come back from holiday. So I'm trying to get that updated with all of Family Building Society's rates. So that'll be available soon. So we'll probably send that out to all delegates as well. A little bit about Grace. She's been working in financial services industry for nearly 7 years. Her hobbies include socialising, travelling to new places, and binge watching the latest thriller series on Netflix, which, as you can imagine, takes up quite a bit of her free time. She also loves meeting new people, which is why she enjoys her job so much. And her claim to fame: Grace was in New York waiting in a line for a pizza. And Catherine Tate was stood in front of her. They had a brief conversation. She was just as funny as she's in real life, I suppose, or on the telly, and was telling Grace about her, at the time, upcoming film. Remember what the film was called?
No, I can't remember now. I think it was called Catherine Tate, something, but I can't remember.
It wasn't called Nan or something, was it?
It was a while ago now.
Yeah, possibly. My mother-in-law is becoming more like every single day. And my son's watching this as well. If you tell my mother, your grandmother, what I just said, son, you're sacked. Right. Okay.
That's
Grace, over to you. I'll see you in about 20 minutes.
Thank you very much. Amazing. Thanks, Tony. So good morning, everyone. My name is Grace. I am the BDM for Family Building Society. I personally cover west of the M25, but we do have a team of 8 BDMs now that are covering the whole of the country. So whilst I might not be your dedicated BDM, I'm sure there is someone out there that can look after your inquiries for you. So who are Family Building Society? It's $1 million question. So if anyone hasn't actually heard of us before and who has been in the industry for some time, you may also know us as National Counties Building Society. So National Counties was very traditional in the way that we lend, heavily manual underwriting, common sense lending. And actually it's our 10-year anniversary being Family Building Society. So when we rebranded, and I guess when we wanted to rebrand, we wanted to keep that traditional type lending, that manual underwriting, that common sense lending, thinking outside the box, keep that approach, but then put that modern day twist on it. Sorry. So the type of mortgages that we look at, we're heavily into that intergenerational lending to clients at all different stages of their lives, whether that's first-time buyers or those lending right into retirement, and we can help them at one point in their life. So that just says there, providing mortgages that meet the needs of families at all stages of their lives, from first-time buyers to applicants in their 90s. So just to sort of touch base, because obviously I'll go through all of these in a little bit more detail, but the type of areas that we do specialise in is that later life lending to age 95. I would say that's our biggest area of lending. That's where we see majority of our business come from. We heavily look at interest only. We look at landlords, whether that's in their personal name, they're lending a limited company, or they're actually living overseas and are expats, but wanting to remortgage their property here onto a buy-to-let. We can consider those. And we look at self-employed, and it's that sort of quirky, more bespoke, certainly not your vanilla type self-employed clients. And then, family assisted lending, whether that's joint or sole proprietor or our award-winning 95% family mortgage. A couple of other things to know. So I've mentioned about the manual underwriting approach. That is applied from the outset. So as Tony said, you can pick up the phone to me or any of the other BDMs and speak through the case. We will do your AIP for you, or if you do go through to the team at specialist, know that the case will be coming to myself. If I do need a second opinion, or we do need an exception, because our underwriters are willing to make exceptions on these cases, if we need to do that, I can actually go to the director of underwriting, sound your case out to them, give them the reasons as to why we should lend to this particular client. And if they're happy to support that, they will put their stamp of approval on it, and that's then going to support your application through to completion. You don't have to worry about this computer says no. You've actually got a human being like you and I sitting in front of your client's mortgage application and thinking, okay, how can I help this client, as to, trying to find all the reasons not to lend. And we don't credit score either. So every one of our cases is just done on a credit search, and we use Equifax as our credit reference agency. Now, I'm not going to sit here and say that we're an adverse lender, because we're not by any means. And you're going to hear me say it, throughout this whole presentation, it's that common sense. You know, if there's an odd blip in the credit report, we will overlook that. You know, the underwriters will ask for an explanation, but if it is just that odd blip, we're fine. It's only really the bigger areas of adverse that we tend to avoid. So CCJs and defaults above £500, we would want them to be satisfied for 3 years. But again, that manual underwriting, if it does make sense and it was something that was completely out of the client's hands, or, you know, they're in the process of getting that removed, we will still look to consider those cases as well. So moving on to our areas of lending. So I mentioned that lending into retirement is our bread and butter. You ask anyone what a family building society is good for, and I'm sure they'll tell you older borrowers that are looking to lend into retirement. Now, the typical client that we see are those that are with the high street. They have done for 30 years, been on an interest-only mortgage, have now come to the end of that term, and the high street lender's saying, yeah, you know, I want that money back. They don't want to extend that term anymore. And the client thinks their only option is to either move on to an equity release mortgage or downsize from their family home. But they might not be in a position to do that just yet. They just want that extra bit of time. Now, there are a couple of reasons why you're going to come to us. One is because of the term that we can offer your clients. So we do have different terms depending on whether this is a repayment mortgage or whether it's interest only. Interest only is based on term guidelines, so it depends on the eldest borrower's age, but maximum age is 89, and we'd offer a 5-year term to an 89-year-old. But on a repayment basis, it's fixed term, so age 95, with maximum age being 90. Now, the other reason why you would come to us is because of the income that we can use. It's not, you know, if you're looking at interest only, it's not a RIO. So you're not having to look at this surviving sole borrower's affordability. You're not restricted on the income as well that you can use. We are really flexible. So we will use your typical state and your private pensions. Easy, everyone can do that. There's nothing too special about that. But looking at more of the quirkier income, so pension pots, so SIPs, for example, or any UK-based investment, for example, stocks and shares ISA, we can use up to 90% of that investment value, even if the client isn't drawing from it. They might not intend on drawing from it for, you know, a long time. It might not be for the next 10 years, but that money is sitting there available for them to draw from should they need to or should they want to. So we're taking 90%, and then what we do is we divide that by the mortgage term. So for example, if someone had £1 million worth of investments, 90% of that is 900,000. Keep it simple, say they went for a 10-year term, divide that by 10, that's £90,000 worth of income that we can use that the clients don't even need to be drawn from. We can also use rental income as well. We just want to see it on their latest year's SA 302s, and we will be using the profit from that rental property. But yeah, lots of different options there on income. Obviously, if there is an income stream that is guaranteed into retirement and you can evidence it is guaranteed, we can put that in front of the underwriter as well and see if they're happy to consider using that for us. So interest only, I'm a big fan of our interest only criteria because I'm sure all of you have been in a position before where you're sourcing an interest only mortgage for your client and it's becoming virtually impossible. You know, there's either a minimum income requirement or a minimum equity amount, and the clients just don't have that. So with us, we make it really nice and easy. If the clients intend on downsizing, we can consider up to 70% loan to value. And what we're looking for here is, with that remaining equity, that they can comfortably downsize, ideally within a 5 to 10 mile radius. And now we're looking at that radius because, you know, these clients have always lived in that area. We wouldn't want them to be in a position where they have to move 100 miles away just to be able to find somewhere to live. So with that remaining equity, we're just going on to Zoopla or Rightmove, putting in the postcode, filtering it down to, we'll probably start at 5 miles and then put the remaining equity. As long as there are 3 or more suitable properties the clients are downsized to, then downsizing can be used as a suitable repayment exit. It's as easy as that. There is no minimum income. there's no minimum equity aside from, you know, the remaining that's there. And the minimum property value is our standard at 120,000. So we want to keep that really easy, really simple for you guys. Now, if you're wanting to max out the borrowing up to 80%, we can absolutely do that. The client even needs to have an alternative repayment exit. So if they have assets in the background, we can look at that. And, you know, if they wanted to put an element of it on repayment, to have, say, 70% of the mortgage on interest only, and then 10% of it on repayment, they can absolutely do that as well. And that would get them that maximum borrowing there. And they could use downsizing as a repayment exit for the interest only element. We will run the affordability on a pure interest only basis as well. There's not really anything for you to worry about because, as I said, we do all of your AIPs for you. So if you come to me and said, great, I've got these clients, you know, they're looking for 20 years, interest only, here's their income, here's their expenditure, and I've run the figures, and over 20 years, it just doesn't quite fit. I would be looking at alternative options to make that fit for your clients. So whether that's applying a 5-year fixed rate, the team at Specialist have access to our semi-exclusive interest-only rate, so they are a little bit cheaper than what's available direct. So we'd either try that option first, or if that's still not quite working, we can then reduce the term down to 10 years, and that will stress it as a pure interest-only mortgage. You can then go to the clients and give them their option, and then 5 to 10 years down the line, they can apply for a term extension with us. The self-employed, so as I mentioned, it's definitely not the most easiest inquiries we get on a self-employed basis. I guess with us, you know, we're asking for a 2-year track record of them being self-employed. We do even need to see 2 years accounts or 2 years SA302s. But what we are looking for and how we can help are those who might have had those unusual trading years. It might be that they've gone from being 100% director and they brought their spouse on as a 50% director and reduced their shareholding. We can consider things like that. Something that's popping up more and more is those clients who've gone from self-employed to limited company director, don't have that 1 year's accounts just yet, which are a lot of lenders are asking for that in order to be able to accept the client. As long as they've got 2 years SA302s, and we can get a reference from their accountant to confirm that there has been a change and that they've gone from sole trader to limited company, that it's had no bearing on the profitability of the company and everything else is the exact same, then we are more than happy to consider those clients. We will work from salary and share of net profit. It does say there for clients with over 33% shareholding. In my opinion, I wouldn't say that's strictly true. If someone's got 20-25% shareholding, we can get an okay from an underwriter, you know, to be able to treat them as self-employed and to use their net profit. Or it could work the other way. If they're receiving, you know, a decent salary from that company and they've only got a 20% shareholding, you know, we can actually work from, you know, just treating them as PAYE. You can look at it 2 different ways here. You know, latest year's figures, because I'm sure that's something that will, you know, crop up in your mind. Can we use latest year's accounts? It's not something that's written into policy, but again, that manual underwriting and being able to get exceptions made. If we've got the right type of case and it's a really strong case, we can go to the underwriter and ask for that exception there. Typically, what we're looking for is a really valid explanation as to why that net profit is, you know, so much higher in that latest year. You know, was the year before just a one-off loss-making year? But actually before that, figures are very similar. Or have they implemented something in their business that is going to generate more profit and that profit is going to be sustainable moving forward? Then we can just get sort of guidance from the accountant, get the accountant to justify that income, you know, is sustainable moving forward, and then we can present that to the underwriters. Contractors, we see a lot of contractors. I think simply because our criteria is nice and simple. You know, we don't overcomplicate it. There aren't specific contractor products. They all fall under our standard product range. All we're typically asking for here is a 2-year track record. And that's not necessarily 2 years contracting experience. It could just be that they've been in that line of work, you know, for two plus years, and now contracting, they're in their first contract, you know, it's set out nice and easy. They've got, you know, a decent 6 months remaining, for example. However, if someone has got only a matter of months left on their contract, the underwriters will ask the question of, well, what's going to happen next? Have they got an extension? Is it going to be renewed? Or have they got something else lined up? If the answer to all of those questions is yes, then the underwriters are more than happy to work from their current contract. Minimum income is 30,000. It used to be 70,000. So now a lot more competitive there. And we will work from their day rate, and that's day rate times 5 times 48 weeks. So moving on to our family assisted lending. So we've got 2 products in particular, the joint borrower sole proprietor and then our 95% family mortgage. Out of the 2, we've definitely seen more business come from this particular product. Now, it's designed in the way of, well, for those clients who have got that deposit, but just don't have enough income to make up affordability on their own. You know, I'm 25, you know, there's no chance I can do it on my own without, you know, any additional help. So we appreciate how hard it is to get onto the property ladder. And that's why we've made our joint borrower sole proprietor product really flexible. So the main reason you're going to use us and you're going to place your first time buyers on this product is because of the term that we can offer the client. We will lend to age 95. You know, it is based on the eldest borrower's age, but if you have parents on there, just know that we can take that right into retirement to mum and dad's 95th birthday, meaning the children, you know, they have that nice lengthy term, which is making it nice and affordable for them still. I think Metro is our closest competitor, and they take them to age 80, which is still fantastic. The fact that you can get an additional 15 years with us makes a world of difference. It isn't just, you know, restricted to parents and children. Any extended family member can help with this product. It can be aunts and uncles, siblings, grandparents. Cousins is a bit of a grey area. I'm not sure. I've not had a cousin yet, so I'll have to find out about that one. But another reason is, I mean, it applies to all of our residential mortgages, but just works especially well on this particular product, is the fact you can have up to 4 applicants on there, and we will use up 100% of all 4 incomes. So you could have husband, wife, mum and dad on there, and, you know, and we're using all of those income streams. And it's not just restricted to purchases. It can be, you know, done on a remortgage. We can, you know, look at capital raising, you know, whether they're buying out an ex-partner or they need to do some essential home improvements to the property, we can consider that as well. And it also works the other way around. So rather than just parents helping their children, you know, can come on and help their parents in the same way. This way is available on interest only as well. So it means, you know, if mum and dad have always been on an interest only mortgage, you know, can't really afford to go onto a capital and interest repayment mortgage, they can still keep it on interest only with the help from their kids. There is no minimum income for this product. All we ask for is that the clients are earning in and around £20,000. Now, that comes down to common sense, really. If you've got someone who's a trainee professional earning £17,000, we would be happy to help them there. I think that's everything on joint borrower sole proprietor. It pretty much runs in line with our standard residential product. The only difference is the additional family members aren't on the title deeds. There's no additional stamp duty fees for them. I just see a question come through. Does the family member have to reside in the UK? Yes, they do. It doesn't work on an expat basis because they're 2 different products, unfortunately. So all applicants do have to be residing in the UK. So our family assisted product, which is our 95% family mortgage, gets a bit confusing sometimes on sourcing because people source for a 95% product and it comes up and it says the family mortgage and everyone thinks it's a standard product. it's not. It is a family assisted product. So it works in the opposite way to joint borrower sole proprietor, because joint borrower sole proprietor is designed for those who've got the deposit but just not enough income, whereas this product is designed for those who've got the income but just not enough deposit. So it's a minimum 5% that's required, and then a maximum of 20% of the purchase price is required as security from a family member. It doesn't have to be immediate family, it can be extended family. And up to 12 family members can help with this product, which, you know, gets a little bit complicated. I don't know if we've actually done it before, but it is possible. So that security is made up of, you know, either savings, and that savings would be with interest paid on it, or as a charge on a family member's main residence. Doesn't have to be a first charge, it could be a second charge. I think we've done a third charge as well, so really flexible there. It is a higher income multiple product, so you're looking at about 5 to 5.3 times an income multiple. So a lot more generous than our standard product. But, and this is what makes this product really unique, and in my opinion, why most people would use it. Let's say, for example, the clients have got a good income, you know, we run the affordability, but it's just not quite enough. You know, they need that little bit extra, but the affordability just doesn't meet it. It could be as little as 20,000, you know, they don't have the deposit to put down, you know, they don't have any more money. Family members don't want to gift that money away because they'll never see it again, you know, and they've got their heart set on this property. The product comes with an offset facility. Now, the offset works in a completely different way to how you think a typical offset would work. It's designed for, like, you know, for the need of family members to put in up to a third of the loan amount, which will offset the interest on the mortgage payment by that amount, but it will also offset the amount that we need to assess them for affordability. So, for example, if you had someone that needed 200,000, but borrowing was only coming in at 180, if family members, and it can be additional family members, it doesn't all have to be from one person, if those family members are happy to provide up that 20,000 shortfall and pop it into that offset facility, we will lend them the £200,000 that they need. Now, it is held in the family member's name, so there is no risk of, you know, the main applicants themselves being able to access this money, and we won't want to keep it, you know, for too long. We only want to keep it for as long as we need it. So let's say in 5 years' time, the applicants, the main applicants themselves, their income has increased. They can now show affordability for that shortfall. We will no longer need that offset unless it's being used as security. But realistically, you know, it's a 5-year fixed rate product. At the end of 5 years, they're already onto the property ladder. You'll be in a position to remortgage them away to the high street, getting them a much cheaper rate. And at that point, you can, you know, any security, any offset savings is released back to the family members. We do understand that it is a big ask, you know, we're asking family members to put up collateral security, so we will cover, you know, cover them for 6 months if they were to lose their job at no fault of their own. Nearly done. Just quickly go through these buy-to-let criteria. So we've got a buy-to-let product, whether that's lending in personal names or limited company, but we also offer a buy-to-let offset product, which is currently only available in personal names. I'm hoping it will move over to limited company soon, but the product is really unique. The reasons why you place your landlord's mortgages with us is one, age. Maximum age is 89 for a landlord, and we'd offer a 5-year term. There is no minimum income requirements. All we ask is that your clients can cover 3-month mortgage payments if there was a rental void. Portfolios, there is no maximum, and we don't stress the portfolio in the background. High rate taxpayers aren't treated any differently with us. First-time landlords are accepted, and we could potentially consider first-time buyers, first-time landlords. But this offset product, it's available on interest only, and your clients can offset 100% of the mortgage balance. And the advance you're getting from us can actually pay straight into that offset savings account. Obviously, if they do that, they won't be making a single mortgage payment until they start drawing money from it. We also lend on limited companies, very similar criteria. You know, there's no maximum number of properties that must be held under that SPV. They could be commercial, semi-commercial, we don't mind. And it doesn't have to be a brand new setup SPV either. It could be trading for a number of years as long as it was set up with those recognised SIC codes. But I won't take up any more of your time. Obviously, if there's anything that you want me to go through today in a little bit more detail, or you want me to clarify on, then do feel free to give me a call. That's just our expat criteria. Really simple, you know. There's about 45 to 50 different countries. We lend in the Middle East, we lend to Australia, but everything else is that same. It's the same affordability on buy-to-let and residential mortgages. That's me, done.
Thank you, Grace.
That's okay.
I've had a slight problem with the lighting in here whilst you were talking. I think I might have blown a fuse somewhere.
Oh no!
Yeah, I've opened the windows. So if anyone's
okay.
thinking why has it gone really weird, he's only got light on one side. It's because I've had to open the windows, open the blinds.
No worries, we can still see you.
What I'll do, I'll cover one question because we are there or thereabouts. We need the next one to come on.
That's all right.
You set yourself 5 as well.
I know.
Is there a minimum property value for your interest-only criteria?
No minimum property value. It's just our standard, which is 120,000.
Right. Okay. Is there anything else? And do you assess higher rate taxpayers differently?
No. It's all that. The only time our rental assessment will change is if you're looking at pound for pound borrowing compared to capital raising and purchase.
Oh, okay. Grace, thank you so much. As always.
No worries at all. Thanks for having me.
No,
Hope you have a great
thank you for
day.
being here. I'll talk to you very soon.
You. All right. Speak soon, Tony. Take care. Bye.
Okay, we just wait to switch over to the next one, and hopefully our next speaker is in the room. I'll just check. Okay, I'll crack on because we're slightly behind. We're only a couple of minutes, but slightly behind time. So our next speaker is Davey Gurm from InterBay Commercial. I'm sure he's spoken at one of our shows before. I'm almost certain he has. You should have received this, the InterBay Select product guide, which I'm going to cover a little bit more in about 15 minutes or about half an hour. InterBay Select is a select number of brokers who've got access to exclusive rates, exclusive products, etc. But Davey will be going into that in some detail today. He's still not appeared, which is never a good thing. So I'll just read this very slowly. Having worked specifically within specialist mortgages for over 8 years, Davey enjoys the nature of dealing with complex cases and finding the right solution in supporting clients with their property financing requirements. Davey, can you hear us? Just check we've got a...
Yes, I can, yeah.
Marvellous, okay. Specialist lenders he's been lucky enough to learn and grow with include OSB Group, which is InterBay and Precise, Landbay and Foundation Home Loans. Outside of his day job, he juggles 3 children, hopefully they're not too heavy, tries to enjoy supporting Reading FC, someone's got to, and pursuing his flying hobby, not for me. He has a passion, I'm petrified of heights, he has a passion for worldwide travel and has visited the USA, Canada, Mexico, Cape Verde, India, Thailand, Cambodia, Vietnam, Laos, Singapore, Australia, and much of Europe. Sounds like my youngest son. He's watching this. His claim to fame, Davey met Girls Aloud when they were topping the pop charts in their heyday after his friend won first prize in a Pepsi competition from the side of a can. Okay, nice one. Davey, over to you. I will see you in about 20 minutes.
Yeah, lovely. Thank you very much. I'm having to join us on a phone, so excuse if there's any sort of technical issues, but should be fine. Thanks for the intro, Tony. So InterBay Commercial. See if I can move these slides along. Here we go. InterBay Commercial is part of OSB Group. OSB Group being Precise, Kent Reliance, and InterBay. Across that group of trading entities, we cover everything from residential, bridging, commercial, holiday let, shared ownership, etc. I'm here today just to purely focus on InterBay Commercial and what we do. Try and move these slides over. There we go. So InterBay offer commercial mortgages, semi-commercial mortgages, complex buy-to-let, and unregulated bridging. So why should you InterBay it is really what we're going to focus on during the course of this presentation, what we do, what kind of asset types we're after, and what we're seeing in the market in terms of some trends and some actual case examples. So on the screen, you should be able to see our core asset kind of commercial sector types that we're after. We are primarily lending within the retail space. That's all retail of all types in many different locations. Office buildings. Offices come in all different shapes, sizes. So whether it's a period building, it's in a sort of regional business park location, or it might be in a city or town centre. Office space is right up there with one of the common types of transactions we'll deal with. Industrial, the light general industrial type storage distribution units. We're not massive in heavy industrial, which is kind of classified as yards, scrap yards, sort of dirty industries that is not that easy to find an alternative use for, may have land contamination, things like that. So it's the light general industrial and storage distribution that we're really after through there. Food and drink, being takeaways and restaurants, not a problem. I mean, most of the food industry, kebab shops, etc., they've been absolutely booming in the last 4 or 5 years, given the COVID period, etc. They all was available to do takeaways and things like that, and we all still needed to eat. So those businesses have really thrived. Medical sector, doctors, surgeries, dentists, pharmacies, we will enter those, no problem at all. We do need to have a little bit of look at the alternative uses of some of those buildings, because some doctors' surgeries and dentist surgeries can sometimes be in some buildings which we might not lend on, like porter cabin type structures, or some sort of childcare day nurseries, for example, which is another asset class we would look at. Often can be housed in like a scout hut type situation. So we need to look at the asset and make sure it's got good. So our headline criteria and why brokers will get fixated on looking at using InterBay. So the big draw from the start is really the ability to go up to 75% loan to value on commercial and semi-commercial assets. That doesn't make a difference whether it's an investment, which we'll lend on, or whether it's an owner-occupied property, which we'll also lend on. So we can offer that across the board on any of the assets at any time, and interest only as well. Basis. We can also offer capital and interest repayment where somebody may want that, but because we do allow a 10% overpayment facility every year within our mortgage offers, many people choose to go the interest-only route and then use their 10% overpayment facility as a way of reducing their balance, maybe in a bit more of an affordable manner, as opposed to being sort of mandated to go on capital and interest repayment. Our minimum loan for Specialist Hub is £150,000. Normally it's 200, but because Specialist Hub are a part of our select panel, we will reduce that to 150k. There is no maximum loan amount, so we do often deal with some very large transactions as well as on the smaller scale. What we've done with the introduction of the select panel, not only is there cheaper rates that can be had, but there is that extra criteria enhancements and service that goes along with it. And where we see the rate reductions on commercial property, it'll be down to the EPC. So if we can evidence we're lending on a commercial property with an EPC rated C+, we can drop the rate by up to 0.7%. And that is a significant saving as we try to really drive landlords thinking about green and how we get green. Now, the government targets on green and EPC targets of C's, B's, etc. is all a bit in the air at the moment, clearly with the changes in government as well. There isn't actually a target deadline. However, it's still prudent to be challenging landlords in a professional capacity to be looking at energy efficiency across the property sector. So we want to drive a bit of that. And that's the reason why we will apply rate discounts where we can evidence good EPC ratings. With regards to criteria and how we assess the cases, if we get an investment, we've got a very straightforward way of just basically saying we need to see 12 months remaining on a commercial lease at the point of completion in terms of the rent that's going to be there. So On every completion, we'll have term certain rent of at least 12 months when we draw down the loan. If there's multiple tenants, then we can flex on that clearly. But if it's just one tenant or maybe two, we'll probably be looking for them to have 12 months remaining on their leases. And if one of them was short, does the other one cover it? If it doesn't, do they have liquid cash available? Evidence that they can cover voids. And we might need to look at exceptions where leases are under 12 months, which we do. For owner-occupiers, we're looking at the last 2 sets of accounts, normally which covers a 3-year period. We only really need to see 2 years, but when you get 2 sets of accounts, typically it covers up to 4 years, because you'd have one set of accounts typically would cover 2 years, and then the second set would cover the third and fourth year. So that's it. That's the only additional. There's the only differences really between when we lend to an investor or when we lend to an owner-occupier. It's either the lease details or it's the accounts. In addition to that, we do also lend to some more complex structures such as SIPs, SASs, and trusts. We see more and more transactions now for these types of ownership. I don't know whether that's because actually the high street are a bit more picky around it now. Maybe they don't want to go to some of the low loan sizes that we could do. And we are seeing a little bit more in terms of pension scheme lending. So if you do come across that, Specialist Hub will have access to product ranges like that, which can facilitate some of those transactions. Something we're seeing more of at the moment is first-time landlords. Now, most of the time, what we'll want from anyone we lend to, certainly if they're an investor, is we really want to see 2 years property investment experience. That doesn't have to be commercial or semi-commercial. It can just be buy-to-let. However, we are able actually to lend to some first-time landlords by exception, where we can evidence 3 things. Those 3 things are: property is fully let, so there isn't a worry about the income stream because day one you've got a fully let property. The applicant has a residential mortgage, which can be evidenced, and they have a background income of their own. Those 3 things have allowed me to push through at least 3 or 4 first-time landlord exceptions this year, which in the commercial market makes a huge difference in pricing. Because if we couldn't do it at our rates, you're talking about rates in the 9s to 10% potentially on commercial property. So we'd like to think that we offer quite a good solution there for those that need it. We calculate on a pay rate ICR at all times. Now, I will come on to what the actual calculation is, but what we mean is if it's a 2-year fix or if it's a 5-year fixed, we will also always use the pay rate. We will never load it by 1.5% or 2%. So it generally means that within the market that we compete within, our affordability model is the most generous and allows the most money out on a commercial or semi-commercial property. The max term on an interest basis is 30 years. Lots of brokers in the commercial world believe it to be 10 years that most lenders will go to on an interest-only basis before maybe the rate goes up or maybe they just can't do it at all. That's actually not the case. We can go to a full 30 years on interest only at 75% loan to value. We also do not offer any ERC overhangs. So when the 2 years fix or the 5-year fix ends, there is no exit fee of 1% to come out of the loan. We actually used to have that on our product ranges, but we lost that about 3 years ago, which again gives us an advantage with some of our competitors where we do see some that are still offering fixed rates, but then with an exit fee to come out once the fixed rate period has ended. We don't do that. Primarily, we are lending off of the market value as a vacant possession. That obviously will help us when we're going 75% loan to value. However, that doesn't have to be the default position in all cases. And there are many examples where by exception, we can go and use the market value, the true market value. And when we use the true market value of a property, we can actually go to 90% of vacant possession. I've actually got some examples a little bit later, which will explain some of that. We've introduced the ability to do product transfers on commercial loans as well. Probably been in place now for about 12 months, but it's really slick. It's a really good process, and it means that the loan does not go through a reassessment, revaluation. There's no fees for these things, and it is a paper exercise in terms of you choose a rate, and we will administer the changes. It does take about 6 to 8 weeks to actually push through because there is some legal work a solicitor has to do, and there's quite a queue with them to do it. However, within the commercial world, it's not that easy or actually that common to find a lender that will offer you a product transfer, a straightforward one at the end of the 2, 3, 5 year fixed that your customer might be on. So that's something that we're really proud of being able to offer. In terms of the affordability, I touched on it a little bit in terms of pay rates being used at all times. So we will calculate on an investment basis 125% at pay rate at all times, regardless of the fixed rate being used. And we use the lower of the passing rent or the market rent as confirmed by the valuer. So it's really straightforward in terms of when you've got an investment commercial loan, it's always going to be done at 110%, 125% of the pay rate. Pretty simple. There's no changes for higher rate taxpayers, lower rate taxpayers, borrowing in a personal capacity, borrowing in a limited company capacity. Literally always the same. For owner occupiers, we are stressing the EBITDA, which is the profit with the adjustments made back, such as your depreciation, your amortization, your tax, your any one-off costs that are not going to reoccur year on year. That would be done at 125% at pay rate based on the EBITDA. But then what we'll also do is when we get the market rent from the valuer, we'll just make sure that covers the loan amount at 110% at pay rate as a secondary calculation. With what we do here at InterBay, because it's specialist, what I call lend and forget lending. It isn't account management. We're not a high street bank. We're not able to implement loan covenants which dictate that we need to maintain a certain loan to value, which dictate we need to see accounts every year, 2 years, whatever it might be. We need to provide valuation fees so we can check the valuation. We will literally look at the facts today, complete the loan, and other than servicing the monthly repayment, we will never, ever assess the loan ever again. So we do, because it's an asset-based lend, we will look at the market rent at all times, even if it is owner-occupied. How our reversion rates work is they revert to the lower or the higher of the starting loan rate or the Bank of England base rate plus a loan margin. So what's happening at the moment is we do get some queries because where the reversion rate is Bank of England base rate plus loan margin, people's predictions are for base rate to fall. And they are hoping that when they come out of their 2 or 5 year fixed rates, the Bank of England base rate plus their loan margin is going to go down. And actually, the starting loan rate will never be lowered. So they'll never actually pay a lower rate than the starting loan rate, unless they then do a product transfer and take a lower rate that is available at the time through that process. So it does mean that their costs won't jump to a hiked SVR. So we know that. But unfortunately, what it doesn't mean is it doesn't just mean that it's going to track indefinitely down to whatever the bottom line might be in terms of where the base rate is at any one time after fixed rates come to an end. In terms of what our underwriters want to see, it really is very straightforward. We've really streamlined what we need to see on a commercial transaction, and there's only really 4 or 5 things at most that any one person will need to provide us with, so that we know we can lend to them subject to valuation. Those things are confirmation of income, not even proof of, just confirmation of what their income is. Normally that figure is stated in a note or a Word document uploaded, which normally matches a payslip or an SA 302 or something like that. But we don't need to see the actual document itself. We will get a property schedule from someone if they've got multiple investment properties across 1, 2, 3 different entities, whatever it might be. We need to know what property investments they hold. And then, depending on whether it's investment or owner occupied, we'll obviously need to see the lease details, or we'll need to see the accounts. Someone will pay the admin fee of £145, which is applicable in all cases. But subject to accounts or lease, the confirmation of the income and the property schedule, we will give you an answer on whether we are going to commit to lending or not within 2 working days of when an AIP actually progresses. So it really is quite a quick way of finding out if we're going to do a deal or not, subject to the valuation. Some examples of cases that we've done. I touched on first-time landlords. This is one of the ones that we've got approved at the moment. First-time landlord buying this shop and flat above. Relatively straightforward in terms of semi-commercial properties, like the bread and butter sort of stuff we will see all the time. The purchase price was $350. The need was 75%, and the convenience store on the ground floor had a lease until December 2025. So we've got over 12 months on the lease. We've got a flat which is fully let. So you've got a property which is fully let for, at the moment, 18 months. They were a homeowner with a self-employed income of 67k. So they met the criteria for a first-time landlord exception, buying a fully let property with a mortgage in the background and having a background income. So that was a really good example of one we could do. This person actually had a historic default as well, where they went into an overdraft when they was a student, but that didn't affect our decisioning, and that was all within policy. Second one, which is actually, these notes are transcript from a broker email to me, but the highlighted points are really what I was focusing on. This is a first-time landlord, again, from someone that owned their own business, with this business turning over significant amounts of money, so it was doing really well. And they were buying a property which was fully let, both residential element and commercial element. They had a background mortgage of their own. They needed 72% LTV. Kind of a no-brainer when you look at the strength of the business, the property they're buying being fully let. These are the exceptional circumstances which make something, it makes like the grey go green, if you like. You know, it's just like the grey area of, you know, looks quite strong. Why can't you do it? And that's where we take that view, that holistic approach. It kind of makes sense. This is an example which I completed on last month, which is actually a multi-let office building. This is an example of a property where we use the market value, going to 75%, not exceeding 90% of the vacant possession value. So this was quite a large one, so it's kind of irrelevant what the numbers were, but the purchase price was 4.25. We were doing 75% LTV. We had a rental ICR at 188%, and there was even some rent-free periods for some of the tenants, which even when we took that out, dropped it to 164. So we knew it covered our 125 quite easily. We had an EPCC, so what we could do is offer our lowest commercial rate at 75%, which was a 5-year fix at 769. That is an exclusive rate as well, so Tony and his team will have access to that. And we knew that all the tenants in there were strong. They were all solicitor firms, Citizens Advice Bureau, and their average time to lease expiry was 6 years. One of the criteria bits I haven't mentioned, which I noted on there, is a 25% PG. So on commercial investments, when lending above 50% loan to value, we can limit any PG to the difference above 50% loan to value. And any loan lower than 50% loan to value, we can actually remove the need for a PG at all. So we don't need to take one. This is just a quick example of a property type which is not within our criteria, which is a hotel. However, with such a strong example of a hotel, I took it to our credit committee and we got it approved. And this one is actually offered at the moment, subject to completion. This is a travel lodge, and it was let for well over sort of 25 years, 30 years. So it is so strong in terms of its rental stream to travel lodge. It made it immediately kind of come to mind as something we should be looking at. So this was a 37% ICR loan to value, travel lodge in there, great borrower behind them, very experienced. So it was kind of a no-brainer, something we took in and we've got approved. So that gives you a flavour of sort of what we're doing at InterBay. Tony's team actually have those access to lower criteria or better criteria, better underwriting, a slightly better service, and dedicated people that look after them. And in terms of our broker database, only 2.9% of brokers have access to our select product range. So it's very small, very niche, and we like to look after that quite nicely. So Tony, don't know if you've got any further questions.
Only the ones you set yourself, Davey. Thank you very much for that. Excellent. As always, let me just see what you've asked. How long we got? We've got a couple of minutes. How buoyant have you found the commercial market in 2024?
Yeah, well, look, I think like buy-to-let and other investment markets, I think it's been fairly flat. It's been steadily flat. Remortgages have really propped it up. There have been some purchase opportunities there, but typically speaking, remortgages have really been the bread and butter type of business. And what we see more so nowadays, and this has changed in the 5.5 years I've been at InterBay, to be honest, our business split is now 50% owner occupied versus investment. And that just shows the kind of growing demand for owner occupiers in terms of looking at other opportunities, because the appetite at various banks does change. And it might be that LTVs have gone outside with certain high streets. It might be that they don't have an appetite for a certain asset class any longer. So you're seeing more and more people that need homes for their owner occupied property. So that has really underpinned what we've seen this year.
Okay, my commercial department is probably the busiest it's ever been at the moment.
Yeah.
So I've just got back from holiday, and I asked for the figures of the pending cases the other day. Commercial team has probably gone up by about 30% in 3 weeks. It's all going a bit crazy. So,
well, I think that's
as you can imagine.
I think that shows that people need a specialist broker to be able to place these cases, because the options are not. You can't just walk into your bank and get a case over the line with a high street bank nowadays. You need someone specialist looking at the options across the market. So brokers are busy, and there's plenty of cases out there. It's just been weighted towards the refinance side.
That's right. One tip I'd give any of you out there is that I'm a bit of a tart when it comes to this sort of thing, but we've now done 4 loans for various local businesses to buy the property that they're currently renting, because a couple of them have been hairdressers. So just getting a conversation with the owner, that's all I've done. And quite simply, you find out that, my landlord's wants me to sell. I mean, I can think of one where he said, my landlord's looking to sell, but I don't think we'll get a mortgage because my wife, who's a director, has got absolutely appalling credit. So I said, well, take her off as a director then, quite simply. And we got that through. Dead simple. I got free haircuts for quite a while out of it as well, which was good. So what are the benefits of you creating the InterBay Select Club to Specialist Hub? That Specialist Hub is partner 2.
Yeah, I mean, look, the benefit for us is we really streamline that efficiency, so we can keep our service within 2 working days. We're using, 85% of our business will come from the Select Partner Panel, and that Select Partner Panel really is specialists in complex commercial loans, not only able to manage them, but able to actually complete them as well. Because it's important that it's one thing dealing with an inquiry, but dealing with somebody who's confident and got the ability and the knowledge to actually go ahead and get it completed throughout all the different stages of valuation, legals, and everything else. It's not that straightforward, and it needs specific knowledge. So it's allowed us to really be more efficient with what we do, who we do business with, and then offer something back in terms of those rate reductions. So we're really happy with how it's gone, and that's been sort of a year in the making now. So it's going really well.
And we're very thankful to be on it, but then we have given InterBay and sister companies an absolute shed load of business over the last few years. So hence the reason why we're on it. So, Davey, I think we'll call it at that. There's no questions from the delegates, so you must have answered everything that they had in mind. So thank you once again. Come in and see us soon. I think I missed you last time, wasn't I? I was probably on another holiday. But come in and see us again soon. And thank you for that. Brilliant. We'll go on to my bit, everybody, now. Simon will remove you from the room, Davey. Don't take yourself out. You might close the whole thing down. Hopefully, the slides that are coming up now won't be in Russian because, as I say, it would appear that Microsoft have done something to PowerPoint presentations overnight that means it doesn't come out the way it should do. So I'm just waiting for that to load. Here we go. I'm going to fly through this because I've literally got 16 minutes and it's probably more than 16 minutes worth of slides. So there'll be a couple of slides I just completely skipped by, but I'll start with this. A little bit of news. I did cover this last month, but very topical, obviously, because InterBay Davey's just presented the InterBay products. This is us being added to the InterBay Select panel. This was several months ago now. I don't know whether Davey mentioned this. I did have to pop to the loo whilst he was talking, so you might have mentioned it. But on semi-commercial cases, they've now got cashback products, which has proven to be very popular. As you can see, I'm not going to read all those bullet points, but there's 83 semi-exclusive products available. So if you have a commercial deal, their stuff does tend to come out the cheapest now as well when we run it through our quoting system. And quite often they're cheaper than the high street as well, which a lot of people probably wouldn't believe, but that is now the case. So give us a call because we will be able to get you something you can't get direct. And also with the expertise and knowledge that we've got of InterBay systems and the people and everything else, you will get more business through, quite simply. Castle Trust reduced rates on bridging product. They go up to 90% of below market value purchase, 80% net. That's why it's in red of current market value. 75% LGDV, whatever it is, LTGVD. There you go. 100% of bill cost funded, and rates currently from just 0.52% per month. Absolutely market leading, semi-exclusive to us. In fact, they came out with a product for us initially for one client in particular. I think now another 3 brokers have got it. But this was actually a product that it launched with us initially, and there will be more to come on this as well. We'll have more exclusive coming out of Castle Trust fairly soon. And keep banging this drum. Exclusive second charge product, 75% LTV. Income calculation will mean you can complete more business. Any amount of adverse accepted, excellent earning potentials, and now available on buy-to-let properties as well. And these are fully exclusive. Can't get them anywhere else. So again, second charge comes out. If you've had a second charge declined by somebody else, first question will be why you're using someone else. But give us a call because there will be business we can get through that you can't get through elsewhere. And a little bit on the FCA, they've shelved their investigation to second charge loans at long last because they couldn't find anything wrong. Have spent millions on it, but as usual, hey, what the hell, it's not their money, is it? It's only ours. But he spent an absolute fortune on it and now concentrating on later life lending and car finance. And some great news, I did mention this last month, the FOS is going to start charging claims management companies and ambulance chasing solicitors a fee on cases that they refer to FOS. So £75 if it's successful, and potentially up to 500 quid if they're just throwing mud at the wall and hoping something will stick. And this will cut out some of the claims that we've certainly seen over the years. I mean, we had numerous people write to us saying, you sold my client PPP or PPI, and we'd never even heard of the client. Or in one case, the client actually took a bridging loan with no repayments, and apparently we sold in PPI. This will hopefully start next year. It can't come quick enough. It really can't. We'll just cut some of the absolute nonsense that we have to go through as brokers sometimes trying to defend something that there was never anything wrong in the first place. Sutton the Specialist, our next one comes up in, what is that? That's 12 days, blimey. Okay, Josh Knight, Sales and Marketing Director of Octane Capital, not to be missed. Register for that. You can register at the end of today's show, but not to be missed. Please attend. Honestly, it will be very, very popular, and we do have a limit on how many people we can take. So please sign up for that as soon as you possibly can. A little bit about Specialist Hub. I've got 12 minutes. So if you want to put business through us, we offer either a packaged or an introduced only, as do many. But my staff deal with both the packaged cases and the introduced cases because they've got the experience to do so. And I'll cover that in a moment. But we now package for a large number of lenders, including Family Building Society, including, you can probably see behind me, we've got the likes of, I'm reading these backwards, Dudley Building Society, can't see what else is there, Tandem, Precise, West One, Quantum, that's just off the top of my head, Lend Invest, Landbay, and others, and I can't remember the others. But if you've got cases of any of those lenders, we don't charge packager fees with those particular lenders either. So give us a call. Why are we different? Not the products we offer, because unless we've got an exclusive, because we all offer the same products, let's face it, unless it's exclusive or semi-exclusive. Quite simply, lender relationships. When you've been doing this 40 years, as have I, you tend to find that the people you've grown up with in the industry, if they stay in the industry, do get to quite high levels within companies. I mean, there's probably people I grew up in the industry, there's probably at least a dozen who hold board positions now. And that is absolute gold dust to a company like us, because quite simply, my staff will deal with underwriters, they'll deal with the BDMs, try and get cases through. If we come against a brick wall, or in some cases we come up against some ridiculous decision by a compliance department or a risk department, I'll just get on the phone to that director that I've known very, very well for many, many years. And quite often, there's one guy in particular I can think of actually came to my wedding. And 9 times out of 10, it's a positive outcome, because they're the ones who make the decisions. And in some cases, it's their money that they're actually lending. So it does make a huge, huge difference. And that is something that you can't buy. You really can't buy. Why are we different? The people we employ, minimum 5 years experience. I've interviewed somebody a couple of days ago, 18 years experience in the bridging market, looking to hopefully join us. And that's the type of quality person we attract. We don't take on people with less than just out of college or university, or have never been in financial services before, because I just don't want the aggravation of having to stand behind them and train them on every aspect of what we do. I want somebody who can come in, hit the ground running, and start producing straight away. Mature with life experience. There's, other than my son, who's 26, who's actually been on the payroll since he was 13. He's actually the longest serving member of staff I've got, I believe, at the moment. All my staff are mature with life experience, often with children, and they know how to speak to people. That's the thing. You don't want to be speaking to somebody who's just just left school, for example, 2 years ago, and you can't hold a conversation with them. My people, you can have a conversation, and you'd be absolutely amazed at the knowledge they've got. And on the rare occasion something goes wrong, they got the experience to realise that, because we're not 100% perfect. Nobody is, but they got experience not just to brush it under the carpet, but to deal with it head on, straight away. And that's why we don't get complaints, quite simply. Why are we different? Not also why we're different. Not our numerous awards from the press. I refuse to get involved in the awards system with the press. I mean, just this week I heard a story about a director of a second charge brokerage, who absolutely hit the roof when he didn't win the best second charge broker at an awards do, even though he'd spent a large sum of money sponsoring it, because he was promised he would, but then hadn't realised that another second charge broker had also sponsored it, but probably paid just a little bit more money, and they won it. Surprising. But if any of you won awards, then good luck to you. You're more than likely very, very deserving of it. But I've seen so many instances of just total, I mean, basically, it's bribery. It's just appalling, some of the stuff I've seen over the years. And there's people within the financial press who've become very, very rich from the awards system that they put in place. So it's not something you'll see us get, because we never put ourselves forward for it. What else we can offer? 1 underwriter from start to finish, commission paid immediately upon loan completion, and no commission clawbacks unless it turns out to be fraud, or the client cancels the agreement within 14 days, which it can do with many lenders these days. We use our own in-house software to quote on all cases, because other than regulated first charges, everything else we use our own software, purely because I haven't found anything else in the market that comes anywhere near what we've got. It's very quick. I know when you put a deal on Mortgage Brain, for example, after 5 minutes, you're still typing in information that's not really relevant. Well, ours takes literally no longer than about 60 seconds to fill in the boxes, and it then can come back with a whole range of commercial lenders, specialist buy-to-let lenders, all bridging lenders that are on our panel, and all second charge lenders, because we're on the panel of every lender out there. Our products, everything except for equity release, won't go for all those. And we also now offer probate loans, which are proven to be very, very popular. A little case study. This was actually, I've added in this because it's obviously fairly topical, because it's Family Building Society. I won't read the whole thing. We was approached by a very, very supportive and loyal broker partner who had tried to go on his own with a case. And he had this case for a young fella who was only 19, was acting, had done a few acting roles, and was then given the lead role in a Netflix series. And this thing took off. I can't even remember what the series was called now. I never watched it. But his income went from 22,000 to 150,000 over the course of 2 years. Now you can imagine 19 years old with that increase in income, every lender that our broker partner went to said, nah, can't touch that. Even though he'd just been, because this first series was so successful, just given a contract for, I believe it was in the region of 500 grand for the next 2 series, and also a contract with a French fashion house for, and I think that was about 150 grand over the course of 2 years. So we put it to Family Building Society, and literally within 24 hours, I spoke with Grace on this. 24 hours, she'd come back with credit back terms. Completion took place 2 months later. Now, as you can imagine, this, I mean, unfortunately, he's not referred us to all his mates in the acting profession, but this was a case that basically our broker, he'd been to dozens of lenders. It took us 24 hours to get that approved. Literally 24 hours, and he earned a decent wedge out of that as well. I can't remember exactly how much it was, but it was about 3 grand. I believe he earned out of it, because we are a packager partner of Family Building Society, and therefore he earned what he would have gone if he'd gone direct, and he had no involvement whatsoever. It's not what, you know, I said about it's basically the people I've grown up with in the industry. Well, here's a great example of it. I won't go through it. A lot of you have already heard this over those that you've watched these before, but I'll probably be still dining out on this one until I die, to be honest with you. A husband and wife, 2 very profitable children's nurseries. Mr. was a crook. He ran the financial side and hadn't paid HMRC any tax or national insurance for years, 850 grand's worth, was sentenced to 5 years in prison. She divorced him, but all the assets in joint names were subject to a Proceeds of Crime Act charge. You know what that means. Reputational risk is used by lenders. Barclays called in both commercial mortgages. Northern Rock mortgage had gone over term. She's about to lose everything and absolutely panicking. I drove down to one of her children's nurseries and met her, went through all the paperwork, went through what we needed to do, and I thought there's definitely a deal here. There's got to be a deal. It's 50% LTV. She's got 300 grand in her business current account, but reputational risk. And it's literally everyone's got, reputational risk, can't touch that, all Proceeds Crime Act charge, even though it wasn't against her. So what we did, we contacted Together Money, as did every other broker this went to, and there was about 7 or 8, we believe. Case was declined by the compliance department because the underwriter taken it to compliance. And they gone, oh no, not touching that. Oh no, reputational risk. Oh, case handed to me, sign off. There's a decline. I thought, no, absolutely not happening, because I've already seen this client. Had a 10-minute conversation with the director at Together, who I've known since he had hair. You might be able to guess who that might be. Who's a lovely, lovely guy and knows his stuff, gave an overview of the case. He's took it to compliance department and said, why aren't we doing this deal? And they couldn't actually justify their decision. And guess what? The decision was overturned. We refinanced both commercial mortgages, refinanced the house, refinanced the buy-to-lets, and she's now back with the high street on all of that and introduced her just under 12 grand on the day of completion. A little bit of feedback. How long have I got? 3 minutes. Mr. and Mrs. Joseph, our mortgage application was successful within a week. And Chris said, excellent professional service. We got thousands of these. I might put them all up online one day. But it would probably take a year to do so, but literally thousands. And we don't get complaints. It's only feedback like this. If you want to submit a case, feedback form coming out to the feedback form, you can put just a note on the last question, and we'll call you back with the type of inquiry you've got. Decision in principle form, I believe these might have been sent to you hopefully today. If not, they will be coming out this afternoon. There is one for every product. Go to our website, submit online, or of course just pick up the phone, give us a call, and staff ready to take a call. Please follow Specialist Hub on LinkedIn. I'm in competition at the moment with 9 other companies, and currently we're number 6 on the amount of new followers we get on Specialist Hub compared to them. If a few of you could just follow Specialist Hub on LinkedIn, that would be great. Only takes 2 minutes. You won't get inundated with stuff, but it just means that our figures go up a little bit, and I do have targets I've set for the staff. Next Specialist Mortgage Web Show is 15th of August, where we got West One, Shawbrook, UTB, and Octane Capital. Josh is appearing twice in 3 weeks, just covering all different products as always, just across the whole specialist finance spectrum. So you can sign up for that now. And future shows, we've got the 12th of September, 17th of October, and 7th of November. Plus also more Sutton the specialist shows, as you probably realised today. Duncan will be appearing hopefully sometime this year. All the documents that I've mentioned before are now available. And any time now, there should be a little click here and leave feedback and download giveaways button appearing. Simon, don't let me down. It's going to appear any second because I can't close down the slide until you do. No, it's not appeared yet. Maybe he's popped to the loo. That should appear any second, but I'm not sure why it hasn't. Just whilst I'm waiting on that, Bill's just like, have you any literature on probate loans? Yes, Bill, I do. I'll make a note to contact you afterwards and send you over some bits and pieces, if that's okay. But yeah, proving to be very, very popular. Contact the solicitors in the area. I recently went to it's something I go to for the local hospice that we contribute to every month, and every month they have a get together with all the people that support them. And I spoke with 3 solicitors, and guess what? All 3 solicitors were desperately looking for some sort of finance for probate situations where people wanted to get some money out early. That box still isn't appearing, so I don't know why, but it should appear in a second. CPD will be emailed by close of business tomorrow. As I mentioned earlier on, check your spam. If it's not in there, give us a call Monday, but check your spam first, because it more than likely will be in there. 99% of the time it is. Feedback, if you really want to give us some feedback, because these are free, these shows, free for lenders, free for delegates, and there's a lot of work goes into these, as you can imagine. Please go to either Google or Trustpilot and just search Specialist Hub, not Specialists Hub, which is a training company within the construction industry, I believe. But if you leave us a review, that would be fabulous. Thank you to today's sponsor, Tab. Once again, thank you for all your assistance. As I mentioned before, if you've got any cases that you think might be a Tab deal, give us a call. You earn the same as if you go direct, but you haven't got the contacts that we've got. So I can pretty much guarantee it. Thank you for attending. It's exactly 12 o'clock. That's fabulous. Enjoy the rest of your day. We hope to see you again soon, and it's coming home, honestly.